So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the.
All right, guys, welcome back. Happy Friday again. If you're just joining us, if you weren't live with us over the last hour for the Cinemark earnings call, now we are going to do a little bit of talk about the market open. And we do have some stuff on the economic calendar today: housing starts, building permits, and PPI, the producer price index. And so since I have been on that conference call listening to Cinemark, I want to check in and see how PPI came in. I see that the SPY is down 0.5%, Dow is down 0.37%, NASDAQ down almost 1%. And as we look at these economic notes here, January wholesale prices rose more than expected, another sign of persistent inflation. Not what Jerry Powell wants to hear. Let's see what the Labor Department had to say. The report comes in just days after the CPI showed inflation holding stubbornly, despite Fed's expectations for moderation through the year. PPI rose 0.3% for the month, the biggest move since August. And economists had been expecting only 0.1%, so triple what they had been expecting. Excluding food and energy, core PPI increased 0.5 percentage point against expectations for only 0.1%. God damn, we just can't kick this inflation. They note here that CPI differs from PPI in that it measures the price that consumers actually pay in the marketplace. So we were talking about CPI a couple days ago. This is the producer's price index that we're talking about today. On a 12-month basis, headline PPI increased just 0.9%, slightly lower than the 1% level in December. However, excluding food, energy, and trade services, the index rose 2.6%. Along with troublesome inflation readings, the Commerce Department reported this week that retail sales in January slid by 0.8%, far more than anticipated. Well, that is what happens when prices go up. People start spending less. I know we pay attention to it in our household, and I imagine that many of you do too. Brian, good morning. Headstock Hiram, good morning. We're going to look at some stock prices in a second. Let me see what other headlines we got going on here. Coinbase shares surge after posting first quarterly profit in 2 years. Jailed Putin opponent Alexei Navalny, is that how you say it, has died, Russian media says. Family offices are going on the offensive, trading cash for alternative assets. What alternative assets are they buying? Cash holdings fell from 11% to 9% from 2022 to 2023. Holdings of publicly traded stocks fell from 32% to 29%. Alternatives included private credit, infrastructure, private equity, and commodities. All right, interesting little footnote for the morning here. Hindenburg, the famous company that likes to warn us who's about to go under next, has targeted well, let's read the headline the way it's written here. Hindenburg's latest short target, Temenos, rejects allegations. Everyone always rejects the allegations, don't they? Shares were down 6% on Temenos after closing 28% lower on Thursday. That is a Swiss software company. Never heard of them. All right, gold and silver holding pretty much close to steady from where we were yesterday. Silent Bart, good morning to you again. All right, let's look at a couple of other stocks. We got up here, AMC down 4% this morning. Probably, I would imagine that is related to Cinemark earnings. Cinemark's down 1.75%, GameStop down 1.6%. And let's also be fair, the PPI index and just general inflation concerns and general concerns that rates are not going to be cut as soon as we'd like is just weighing on the market as a whole. So let's not throw AMC completely under the Cinemark bus. We got all of the indexes going down this morning, and that generally affects everybody. Earnings from yesterday, I'm just seeing if we have any major changes. Roku continuing to melt down 21% from yesterday's close. And DraftKings held on pretty good, 2% down from last night. Coinbase, the winner, up 12% from the close yesterday, and DoorDash down 12% from yesterday's close. All of these had earnings yesterday. What happened to my screen? Don't tell me I closed my Weeble. There we go. Let's look at a couple of others. I saw somebody calling out DWAC. They had a big bump up on the 14th. It's basically holding flat this morning. I want to look at a couple of other retail stocks real quick while we're here. BMR hanging in at $10.40. Coinbase we already talked about. Haven't looked at Carvana recently. They're still hanging up there. DWAC, we talked about. Finger this morning down 2.25%. GTII up almost 3%. Hawaii Electric, $13.10. Lucid this morning, continuing their generally upward trend, currently trading at $3.67. LICN got quite an interesting after hours bump last night, unexpectedly jumping from $1 to $3.36. And then this morning I saw that there was news that they were, surprise, surprise, CEO handbook, issuing a $100 million mixed shelf offering. So, yeah, in light of knowing that news is coming, I don't know why it would have run up to $3.36, but I doubt it will hold this $1.13 level, knowing that 100 million shelf is coming. What else we got here? Mullins, our favorite EV company at 828. Nvidia this morning at 731. Holding on to the green a little bit. B. Riley now below 18 bucks, 1744, a target of the shorts. Rumble, $7.73, hanging on to their recent gains from the beginning of this year. Safety Shot continuing their downward push. And the other retail darling flavor of the month, ZJYL, 821. Speaking of other retail stocks, what other things do I remember reading from last night before I fell asleep? I saw that we were talking about MMAT, which again, I don't own any MMAT, but I follow a lot of the different retail communities. They moved out of their headquarters building recently, and someone sniffed that out and posted it on social media. Now it comes to light that they owe millions of dollars unpaid to contractors who outfitted that building for them when they moved in. And I guess there's a lawsuit pending on that. So not great news for Meta Materials. Kimberly, good morning. Working from home, she says, so I can finally listen to Market Open. Welcome, Kimberly. Mr. Freckle, were you here a minute ago when we went through the PPI? If not, just rewind about 5 minutes where I have it up on the screen. What do we have moving this morning? Let me populate these. CPOP. Jumped from a dollar in pre-market, in after hours, last night to $8.50. Dropped to $3.67 at market open, and they are making their way back up. GXAI, an AI company. AI has been popular if you have that in any press release lately, as we've seen from some of these tickers that have been moving. GXAI this morning up 245%. Excuse me. HTOO, I saw some traders on Twitter last night talking about this one in after hours, moving from $1.12 up to $4.75 this morning. Currently reconsolidating or slash selling off, and at $2.99. And the final one we'll put up here is AMBO. Up 200%. A 42-cent stock. Silent Bark says, check out Trade Desk. Yeah, thank you for the reminder. That was also on our earnings from yesterday list, and they did, as I recall, perform handsomely. Trade Desk, TTD. I think they were the winner of everybody that reported earnings yesterday. Up 14, almost 15%. A little bit of a sell-off after this morning's push. And I think we looked at their financials last night also at the market close live stream. And I'm adding, I said I was going to add this one onto my list to figure out a buy-in price because they have a great revenue chart over the last 9 years, solid increasing top-line revenue. The net income chart has mostly been positive. There's been 2 quarters in the last 9 years that they have not turned a profit. It's not a solid net income growth story, but it is all positive net income. They are not diluting. Positive operating margin, positive profit margin, positive free cash flow. And on the balance sheet, we look at cash and cash equivalents. It's only been growing over the last 8 or 9 years. They have, maybe over the last 4 quarters, just been holding steady on cash and cash equivalents, but that is far better than a lot of the stocks that typical retail trader looks at, where you're just burning off all the cash because the company's losing money. So a lot to like here on ticker TTD. Total current assets versus current liabilities, which is your working capital, is very, very healthy. You want to see current assets higher than current liabilities. Where is it? Right here. 2.5 billion versus current assets of 4.3 billion. So good shape there. And we look at long-term debt, it has only been decreasing. So another good sign. A lot to like with this ticker. I don't know a ton about it. I'm just doing a 60-second overview, as I typically do, to see if we've got a troubled company or one that is justified spending a little more time getting to know. If you're not familiar with looking at income statements, balance sheets, or cash flow statements, and you want to be able to look at them in 1 minute or 2 and ask yourself, am I about to get into a high-risk play, or am I looking at a company that's relatively safe? Go back in my video history and look for the how to read a balance sheet, how to read an income statement. 3 videos, how to read a cash flow statement in 5 minutes. And I give you some little tips. You don't need to be an accountant. You don't need to be a finance major. Just a couple things to look at really, really quickly and cut through the noise of social media and really do your own DD. Am I about to buy a solid company, or am I about to buy a company that is high risk? I'm okay with you buying a company that's high risk as long as you know it going in, so you can size your position appropriately and have an exit plan that is appropriate to the risk if things don't work out. I buy speculative companies all the time. But there's not enough people, I'm afraid, looking at these financial statements, or trying to even understand them at an elementary level. And then they wonder why Wall Street pushes the price down, because the story is not there. And we can't, it's fun to play short squeeze plays. But if we end up holding them a long time and their financial statements are in not great shape, most times we end up paying the price for that. So I just encourage everybody to get better, even though it's a pain in the ass. I know if you don't enjoy numbers, it's a pain in the ass to read that stuff, but not enough people talking about it. And if we do talk about it, we get, I get accused of being paid by the hedge funds. Tony's talking about that AMC balance sheet. He must be getting paid by the shorts. No, I'm just doing the basic work that any investor should do. It always amuses me, guys. One day, depending on who's listening, one day I'm paid by the hedge funds to talk bad about AMC, and someone else will listen to the same video and say, he's obviously paid by AMC to pump AMC. It's just a balance sheet. That's it. The story tells itself. How you interpret what I'm saying based on your preconceived bias, that's up to you. I can't control that. But numbers are numbers. Math is math. What else we got going on here this morning? Any other tickers, questions, economics? Don't forget, if you haven't been paying attention, Monday the market is closed, so we're going to have a 3-day trading weekend. We got President's Day in the U.S. on Monday. And I'll see if we can get some fun live stream or two going over the 3-day weekend. I've got quite a few videos that I need to get out. I have not been able to get as much work done on the stock ticker videos that I wanted to this week because of the outdoor projects. But I wrapped up one of them last night, and I'm going to get a couple videos out before I start project number 2. Let's look at all of the EV companies, and we'll look at all of the movie companies. And just see what the lay of the land looks like in EV world here real quick. Tesla is the only one that I own at the moment. I don't have any issue with any of the other companies. I need to look at all of their most recent earnings and see if any of them have improved their financial situation. We got Rivian. Let's zoom out a little bit more here. Rivian trading at $16. NIO at $6. I mean, you can see the general curve trend over the long term here from 2021. On all of these, looks about the same. Fisker at 74 cents. Ouch, they're really struggling. Hyliion, the truck company, $1.50. Not a bad return if you grab some at 51 cents back in October. But they're struggling, and they still refuse to have me come by and pay them a visit in person, even though they're right up the road. Mullen at $8.49. Polestar at $1.77. Recent news on Polestar is that, who was it? Who was it that was funding Polestar? Is it Saab? Anyways, one of their major backer. I'm having a senior moment at the moment. One of their major backers is pulling out of PSNY, which leaves the Chinese company to pull the weight to back Polestar. Great looking vehicles. Cinema companies. AMC down about 4%. Cinemark down 1.25%. Disney's down 0.25 point today. Marcus Theaters down 1%, and Paramount down 2.5%. So if you're just holding AMC, for the most part, everybody's getting bled out this morning, with the exception of IMAX. And the key difference between IMAX and anybody else is they're not paying for all the real estate. They come in like a what are those birds? Is it a cuckoo that comes and drops their egg in the nest? They're like, oh, here's our equipment. Would you like it? We're going to charge you for the equipment. We're going to charge you the licensing fees, and we're going to charge you the service contract for the equipment. IMAX has a sweet little setup where their capital costs are much less than the actual movie companies like AMC and Cinemark. So they are in the green today. Our blue chips. Costco continuing to push up around 722. Apple is 182, a little bit of a pullback from 199. Thank you, Silent Bark. I'll pull up NNOX in just a second. I need to get some trade in this morning. Amazon 167, approaching, they're on their way to approaching their all-time high of 188. That is the that was a 2021 price. Their 52-week high is 175, so they're on the cusp of that. Disney 112, hanging on to those recent gains really, really well. Google at 140, 52-week high on Google is 153.78, sorry. And that was here recently, just in the last couple weeks. Hasbro is on my list to go do a deeper dive on. Not ever a company I've owned, but in 2019, they had a high of 106. In 2021, they were at 94. I want to go study why they're at $50 and if that is something that I should put on my list to establish a buy-in range. Meta just crushing it. Microsoft pushing up also. Netflix 582, just under the 52-week high of 597. 2021 high was $700. PE ratio currently is $48, which seems expensive, but you know, a lot of the streaming companies are struggling right now, with the exception of Netflix, which in their most recent quarter posted another positive income quarter. In fact, looking back, it's been a long time since they've had a major miss. The question is, are they getting overpriced? And that's the question in my mind, anyways. Palantir this morning at 24.78. I'm still watching that one, waiting for a signal if it's going to consolidate at this level or try and pull back. I did sell into that run up. And I like where Tesla's at right now. We'll see if they can push back up a little more. What's up, Bigums? What you got on your mind this morning? NNOX was what Silent Bark wanted us to look at. Oh, man. On the 14th, Wednesday, they were trading at $6. A big push up to $14.73, currently at $10.92. Not too shabby, my friends. What happened on the 14th? What did Silent Bark say? Oh, he didn't say. Oh, NVIDIA Right, NVIDIA disclosed a stake in ARM. That we knew about. And they disclosed a $380,000 investment in NNOX. Let me see what else is going on with this company on the finance side. How do I feel about ChargePoint season curlies? I used to own some ChargePoint, and I held it for a few quarters, even though I did a video on it maybe a year or two ago, and I held it through some bad times. And then after a few quarters of getting spanked, I went in and looked at the financials again, and I asked myself, why the hell are you still holding this? So I sold it at a loss. Here's the weekly chart for ChargePoint. From $49 down to $1.56. And when I went in and looked at their financial statements, I was not seeing any improvement. And in my mind, if they're not improving, they're not even slowing down the bad news, I'm not going to write it all the way to zero. So although, you know, they are an important piece of the EV industry with all of their charging stations, the results financially just weren't there for me to keep on holding. At some point, I'll go in and take a look and see if they are able to do any turnaround. Maybe, you know, soon. $1.50 was the bottom, and it's at $2.17 right now. Maybe the market's starting to see something, you know, signaling here for me to go in and take another look at it. But it's been many months since I've looked closely at ChargePoint. Let me look here real quick at NNOX and see what we got here. A slight increase on their top line revenue. They have not generated profits. I see nothing but negative net income, which it's early. It's early yet to say if that's bad news. Let's see what else we got here. A minor amount of dilution, which means they're probably burning cash. But let's look at the balance sheet, see what we see here. Not horrible. They have 66 million in cash, 94 million if you include their short-term investments. Total current assets 97 million, liabilities 20 million. Current debt is low, long-term debt is fairly low, and you know, not growing out of control. So yeah, the balance sheet is okay. The main problem with this company is that they're just not generating any operating income yet. So that being said, you know what the issue is with this company. They need to generate enough income to turn a profit, or at least have positive operating cash flow. And you would need to go in, and if you're trading NNOX just for a few days for the chart, that's one thing. But if you're wanting to buy and hold it long term, or you're bullish because NVIDIA made a $400,000 investment, then you got to go ask yourself, have I read through all of the 10 Qs and the management outlook What products do they have in the pipeline? What's their growth curve look like for sales? What are they forecasting? And do I believe all that? Analysts have a price target of $20. So how many analysts we got? 3 that seem bullish on it. And Mr. Ross Osborne from Cantor Fitzgerald firm is doing the most frequent updates on NNOX, and his current target is $18. So that seems, fairly bullish. I'd like to go read his report too. That's another thing I would do if I was thinking about holding this company. What does Ross Osborne have to say, and why is he bullish, and do I believe what he's saying? It looks like they are forecasting 2025, late this year into 2025 being a major revenue growth curve for this company. So go dig into that. That's what I would do. Bigham says, not much new, just reading over more corruption. I saw that message you sent me this morning about the penalties that these hedge funds and institutions get from the SEC. The bulk of it they can write off as tax loss. It just the disappointment I felt when I read that. I never thought about that, but it never ceases to amaze me how they can turn a lemon into lemon pie. These I want to say crooks, but if they're taking advantage of a legal loophole in the tax code, it is what it is. They're like, please don't throw us into the briar patch, Mr. Gensler. And then they end up coming out with a tax write-off, those sons of bitches. Unbelievable. Jerry says, do I believe or trust the analysts concerning the AMC price targets? I mean, they've mostly been on spot. If I just look at the numbers that they're posting, this is the unfortunate thing that we're going to delve into territory that some of you aren't going to want to hear. I talk about it much more often in my Discord because I know my audience in the Discord is people that want real information, not just to be spoon-fed hopium. But the analysts are looking at the domestic box office. They have spreadsheets much like the one that I post up on my earnings calculations. They can plug in. It's very predictable. If you do the work to create the spreadsheet, if you know the box office, you can estimate with reasonable certainty what the income or profit, the income or loss for each quarter is. And I already have 2025 forecast, how much AMC is going to make. That's very easy to do. And that's what these analysts are doing. And they're talking to Hollywood, movie production studios. They're talking to all the competitors. I think we would be foolish to discount if we take them as a set, we'd be foolish to completely discount what they're saying. And I can confirm their projections by doing my own analysis. Like, forget what they said. Let me just do the work myself and then go compare it. And I try and do that on every video for you when I do the earnings comparison. I'll compare my numbers to analysts. And usually my numbers end up being a little more bullish than theirs. And we've tended to be right. Like, I think they underestimate earnings a little bit. And maybe they're just more conservative than me. And I'm already pretty conservative. or maybe they're just trying to be bearish, right? That's always a good question to ask yourself. But for the most part, we've seen the price be driven down to what they had as a target. So I don't know what to tell you. Do I believe it? Doesn't really matter what I believe. Only matters how the market reacts to it. And what we've seen is the market drives the price down to the analyst consensus. And again, how I'm looking at price is I know you want to know, what is $5 a fair price? I think it's undervalued a little bit. But price is a reflection of future earnings. And our future earnings for this 12 months is going to be a negative number. So what's a fair price? If price is a multiple of profits and you have no profits, what is a fair price? That becomes a difficult question to have a debate on, because now you're talking about feelings or your analysis of the industry. Are you bullish about movies? Is it going back to 10.5 or 11 billion, or are you a complete bear and you think streaming is going to win? That's never a debate that is going to be decided in a debate format. It's only going to be decided by time. I lean more towards the bullish side, but I can't promise you I'm going to be right. I just look at what analysts in the movie industry, not the theater company industry, in the movie industry, I look at their projections and I compare that to Cinemark and AMC and IMAX, what they're saying. And I think I have a pretty reasonable outlook for where the industry's headed. And to me, that is bullish if we can hold on for a year and not run out of cash. Smooth Operator, good morning. Zelly Zen, good morning to you. But yeah, Jerry, to answer your question, if I analyze AMC the same as I do any other company, all right, let's take out corruption and shorts and all of that. If I just look at something like this, the analyst price target. If you watch any of my other videos on any other company, I always look at this on any company. What are the price targets? What's the average, the high, the low? The average for AMC is $9.75. The low is $4.75. The high is $19. We got 5 analysts making predictions for where the price is going to be in 12 months, over the next 12 months. We have even here their forecast for earnings per share and revenue. And let's see, they have 4.9 billion for AMC, 4.6 billion. And what do I have? I have 4.2 billion for 2024. My numbers might be too low. I mean, the analysts are actually predicting more revenue than I am for AMC based on my model. So there you go. There's no emotion in a spreadsheet. I just plug in an estimate for the box office and it spits out a number. And that number is validated by years of previous data. The only thing I don't know, the number I don't know, is what is the total box office. So that's the one I go in and adjust as we progress through the year and we get a better idea what the box office for the year is going to look like. Then I can estimate what the revenue for the year is going to be, which then gives us a reasonable estimate for yearly income or loss. Juicy, what's going on, my friend? Jerry M is asking about Tesla. I don't know what your question is, but feel free to expand, Jerry. I have been buying Tesla in the low 180s, and I'd love to buy it at 150 or 120 if I had an opportunity. I think getting back to Jerry's question about AMC and analysts, the tough come to Jesus moment for everybody is accepting, the transition that we did on this channel, the hashtag evolve, to not ignoring the balance sheet and the income statement. It's all fine to look at short interest and talk about, like these some of the other channels do, Mr. Donahue, billions and trillions of synthetic shares. That's all fine if you want to focus on that, but I've found that by shifting over a year ago to looking at the balance sheet and the income statement, that it was giving me much more predictable results for what I thought that the price would do. It was one thing and fine and dandy to ignore it in 2021 when we had $2 billion in cash and everybody was flush with free money from the government and interest rates weren't rising. We didn't have to, and I often don't, look at financial statements on a short squeeze play or a momentum play. It doesn't matter to me what the financial statements say. But if what we wanted to happen or hoped to happen didn't happen, and we're stuck holding it, and the company's running lower and lower on cash every quarter, it becomes more important not to discount that stuff. I know it's not popular. I get that. Headstock Harem says, maybe billions, certainly not trillions. No one knows. I don't know either, but that's not the focus of my channel. There's plenty of other people covering that for you guys. As you know, I try and stick to the reported data because I tend to stay out of trouble. If I'm reporting data to you that is generally accepted in the market, then I feel, even if it's not entirely accurate, and I know many of you don't trust the data, and that's fine. We can all still be friends, but I still have to keep myself out of legal trouble, if you know what I mean. The ones who are pushing this billions and trillions of synthetic shares ought to be a little bit concerned at some point if things don't work out. And if they do work out in my plan, covering the reported data and looking at the financial statements, I've got a good trading plan for what I'm looking at. And if as Mr. George says, there's trillions of synthetics, then I get a nice bonus in the price run up when the unexpected happens. Jerry says, I don't think AMC price reflects true supply and demand in the stock market. Some stocks price is driven by supply and demand, like Tesla. Let's see how I feel about that. Here's the thing, Jerry, how I kind of look at it. The price is always reflective of supply and demand. The issue that I think you're alluding to, and I wouldn't disagree with you, is that due to the shorts targeting certain companies, they can artificially increase the supply. I guess that's a nice way to say it. They can increase the selling pressure, and if buyers aren't showing up in an equal number, then and institutions are not buying AMC right now for the most part, other than, we saw Vanguard increase their ETF position back to the 8 to 9% range, but I'm talking about the speculative institutions, the ones that want to see a big price run up. I still think they're a quarter or two away from getting back into AMC. So when we don't have massive buying pressure, then the people that are selling it, whether they're adding to the short interest daily and increasing that short interest percentage, or whether they're just churning it with high frequency trading, short buy, pushing the price down. In that respect, I agree with you, Jerry. It's not a true reflection, but it is telling us that there's more people selling than there are willing to buy. And I think that will change when a couple things, as we've talked about, get resolved. Just to recap those things that I'm looking at, we got to get an extension on the debt covenants. I do expect that before the 28th of December, an announcement from AMC that the lenders have agreed to waive AMC being in default on the debt covenant. So that will be another debt covenant extension for a year or two. We got to get that out of the way because our current extension runs through the end of March. We want to see the lenders say, we're going to give you, AMC, another year or two of leeway. We're not going to foreclose on the company. We got to get that out of the way for buyers to be more comfortable, big buyers to come in. We gotta get eyeballs on how bad the cash burn was in Q4, and then we can make some better predictions about how bad it's going to be in Q1, and then we can further make some estimates if there will be any more dilution this year. And I get comments all the time on Twitter from the bears. You're going to get diluted more this year. Maybe. I don't know yet. I got to see the upcoming cash burn. So that's keeping big buyers out. What was the cash burn in Q4? Is AMC going to be forced into raising more cash? And the third and final thing, as we plod through this year, is or are they going to refinance the 2026 debt and push it out? I'd like to get that off the table. Once I think all three of those things are we know the answers to them, then this becomes a play where we might get more institutional buyers or even retail buyers besides those of us that really believe in the company buying it at these cheap levels. We get more conservative institutions coming into the play. And that may take, till the middle or late part of this year to get answers to all of those questions. Until then, I'm calling 2024 for AMC the year of the volatility trader. So my guess for this year is we're going to see, I hate to lose words, but we're going to see ping-ponging. Ping-ponging with some wide volatility in price. And if that ends up being the case, my plan for this year is to take advantage of that, because we know the box office isn't going to grow. So if I think that the company's not going to do more dilution and the price is just going to bounce between 4 and 8 or 4 and 10 or 350 and 8, then I'm going to try and capitalize on that and then be positioned for growth towards the end of the year. That's my plan. Not everybody's going to like that. Not everybody's going to do that. I'm just here telling you what I'm looking at, what I'm doing. Do your own DD. set up your own plan that is appropriate for your portfolio and your risk tolerance. And I 100% could be wrong on everything. We could have a dilution announcement tomorrow. We could have a short squeeze tomorrow. Nobody's crystal ball is perfect. We all have our own things that we're looking at. I'm looking at only the things we just talked about, the three things I'd like to see resolved. I'm looking at cash burn, and I'm looking at box office. And then I pray, just like all of you, that there's some surprise announcement. And I heard someone saying, what does he mean, surprise announcement? That they hire a VP of distribution, and they make some, which there is a job posting right now for a VP of distribution. If they can get that person on board and start cranking out some distribution deals later this year, that would be some surprise news. Other surprise news would be any movie that you can think of that's on the roster for this year outperforming expectations, kind of like Barbenheimer did. And yeah, that's about what I got for good news surprises. I mean, we'd also, one other one that we've said that we'd like to hear that I don't think we'll get, but if we did, I'd love to see it, for AMC to say we're not going to dilute for the rest of this year. If they were to say that, I think that would be super bullish for the price of the stock. But I don't know that they can say that yet, because they're probably much like me. They're probably looking at the cash on the balance sheet and trying to project, are we going to make it through this year or not? So as much as I'd like them to say that, I pray every day that we wake up and hear that in a tweet or an 8K. I can't tell you with any degree of certainty that we'll get that in the near term. I had a good chat with a new member in the Discord last night. If you are in the Discord and you don't have full access to like the AMC rooms or the live chat, the voice chat, send me a message in Discord. I spoke with the gentleman last night for about 45 minutes, and I do those one-on-one just to get to know you guys, what your goals are, what your experience is, and to better know the members of this channel. If you're a member of the channel, you got a badge next to your name in the YouTube chat, and you're not taking advantage of the Discord, it is free for anybody that is a supporter of the channel. All you got to do is download Discord and link it to your YouTube name, and it's free. It's right there. And our Discord, from what everybody tells me, is very different from others. We encourage debate. There's no wrong answers. You're not going to get booted for having a different opinion from me or anybody else. And you know, I'm pretty much available in there any waking hour that I'm up for you to ask questions. If we're not having an all-day live stream, or you know, if you missed the morning or afternoon live stream, you just have a question. It is a group of very reasonable and for a large percentage of them, experienced traders. And by trader, I don't mean that in a bad, like, oh, they're just here to trade the stock. I'm talking about people that have decades of experience in the stock market, not someone that just came on the scene in 2021. So use that tool if you're a member of the channel. and make that one more resource to ask about anything: stocks, options, starting your own business, real estate. We have a lot of breadth of experience in the Discord. Headstock Harem says Mullins moving. Let's take a quick look before we wrap up for the morning. Holy smokes, it sure is. Do we have news? No news that I see here. Let me check the Twitter. There are so many damn bot accounts tagging Mullen on Twitter. I don't see any specific news here. A lot of people happy though, and that's good. If you're happy and you can make some money on this one, that is good. I see a lot of people saying don't sell. I guess we'll see by the end of the day who's right on that. I don't own any Mullins, so I'll just send out prayers and good thoughts to any of you that are in that play. Volume this morning is 1.27 million shares, which is approaching their normal daily volume, and we're only at 10 o'clock in the morning. I haven't checked the short interest of Mullen, but if there are some shorts, I hope you guys put the squeeze on them. Headstock Hammer says he has one share left after all the split. Oh man. The shares outstanding on Mullen, or the float, is 5.7 million shares. So as of right now, about 25% of the float has traded hands. Although, you could have a much smaller sliver of that if everybody's holding. You could have a much smaller sliver just trading 8x. I don't see any Mullen news, so it's a mystery. Maybe we'll find out by the end of the day. All right, we are going to wrap up the morning session. My current plan, unless things change, is to be back with you guys for market close at 2 p.m. Central, 3 p.m. Eastern. It is Friday. If you are a movie lover, there's a couple of good movies out right now. Well, good in my opinion. The Bob Marley one, I plan to see that one this weekend. And I did book my Dune 2 for later this month in IMAX. Check in your local area if you like the Dune series. I'm hearing nothing but fantastic things from people who've seen the pre-screening of that in the industry. And let's hope it does 2, 3, or 4x what Dune Part 1 did. which was the first one did about a little bit over 100 million domestic, 400 million worldwide. So if we could double or triple that, that'd be a good start to this year. Unfortunately, well, yeah, I mean, it's end of February. We need a bump. We need a bump for Q1. We need some good news for Q1. Other things, so Palantir's on my list. I've got to do a Cinemark recap video. At some point over the weekend, I'll get those videos out. And if you have any other tickers that you're, and ChargePoint, I should probably take another look at, but I'm trying to find stocks that are not losing money that we can pick up cheap and ride to market beating returns. That's the main focus of what I'm looking at for upcoming videos. So if you have questions, especially if you're watching this on replay, comments or other tickers, feel free to drop them in the comments of this video after we end the live stream. Michael says, why don't you stay longer and check out charts? Because it's hard for me to trade, Michael, when I'm live streaming. And my wife is also home from work today, and I have a video project from my other channel, the Texas Organic Gardening, that I need to get posted up. I need to do the voiceover and get that loaded up. So I have a busy day here. I'll be in the Discord for those that are members of the channel. Thank you to each and every one of you for tuning in this morning on the Cinemark live stream and here at the Market Open with us. And I will be back with you guys in about 4 hours.